What's going on, ladies and gentlemen? Welcome back to another pre-market watch list here today in the boiler room. So yesterday was a really good day trading, especially for UVXY. That's going to be one of the main tickers that I watch today. But I think we're going to have a lot of opportunity today. So I'm going to go ahead and cover the stocks I'm watching: UVXY, MNGA, ECYT. So few penny stocks, few larger stocks. So there should be, quite a few different stocks that everyone can trade here today. That's going to be on our watch list. Good morning, Joel and Rob. What's up? What's up, world? Well, thank you. So we're going to take a look at what it is we have to trade here. So 1 second. Go ahead, share the screen as always. All right. First things first, let's talk about UVXY. I don't want to do that. Hold on 1 second. Here we go. So we'll talk about UVXY, and we'll first start by looking at the S&P SPY ETF. So as you can see, yesterday, it basically went down all day, right? So whenever the SPY goes down, UVXY is going to go up, right? And then it continued down into after hours trading and after market trading. So ideally, this is up pretty big, right? This is already up pretty big. The SPY is down pretty far. So here's the deal. You really, in order to trade UVXY successfully, you just have to pay attention to what the SPY is doing. So not going to cover too much on that because a lot of you guys already know about that, right? So 1 second. Nah, it ain't falling off. So anyways, we're not going to talk too much about UVXY, but again, that is the ticker that I primarily traded yesterday and was able to make about $5,000 trading it, just that ticker alone yesterday. So a lot of opportunity on it. So we're going to be watching the SPY very closely today. I think we'll see the SPY actually kind of squeeze up a little bit and test some key levels like 271, 272, 273 maybe. So initially, I'll probably be short biased on UVXY for the morning. All right, now let's talk about these two bigger price stocks, PTLA. PTLA had some bad earnings. It gapped from $45 down to a low of 28. So this thing's down pretty big, right? From 45 down to 28. This leaves a lot of opportunity to potentially short to the pre-market low, right? So right now the price is at 34. If this continues dropping, we'll probably short this with a target at low of day or the after hours low of $28. Right, so after bad earnings, it's very unlikely that this is going to pop up much more than it already has here. We'll probably see PTLA actually roll over and continue down. So going to be short bias on PTLA today here, probably with a target to 28, to that after hours low. Okay, let's see. Good morning, Scott. Next thing here is there's PTLA. What happened? Was it Monster? No, Box, BOX. So this one is Box, BOX. It was $24 a share, and then it gapped down all the way to $20. If you look at the yearly chart on BOX, you'll see that $20 is held up as a support before. We've kind of bounced in this area a couple times. So I kind of think we're actually going to go long on Box today if it does, in fact, continue to hold up this $20 support. So again, this is a bad earnings play, gapping down. There might not be a whole lot of movement, so I'll be looking to short BOX if it breaks below 20. And then I'll stay long bias on BOX if it stays above 20. Colorado, Kenny, good morning. All right, so there's 3 of them. Next one is ECYT, probably one of my, more of the favorite stocks to trade here this morning. All right, so first let's look at this 5-day chart. 5 days, it's been running up like crazy, right? It's up from basically it's been running up for a couple weeks now. Ready? Watch this. So from a low of $3 all the way to a high of $6. So a $3 move this is made over the past week, 2 weeks. It's got clear resistance at $6. You can see it spiked over briefly here before coming down. It peaked up to it right there before coming down. And now we're right at $6. And not only are we at the $6 resistance, but the price is way overextended and it's starting to gap down here today, and this is what we call the first red day setup for short sellers. We look for these stocks that go parabolic or have been squeezing for a couple days and haven't really seen any big red day. And, you know, if they keep grinding up, and then, you know, come to find the next morning, they start gapping down, this is a sign that we're probably going to go red on the day. And essentially what we call the first red day setup. So definitely going to be short biased on ECYT. What I would probably, you know, what I want to kind of see happen here is maybe towards the bell, we open up and we squeeze up and we retest, you know, somewhere up here, probably, you know, 580, 590, right? Watch it squeeze up a little bit, reject these levels, and then start rolling over down on itself. And then we could say that, yeah, we might have a first red day and we'll short this, looking for it to fade all day long. All right. So again, if we look, key thing we look for here is we look for stocks that are running up for days. And then as soon as they gap down in the morning pre-market, that's a sign for the first red day setup strategy. And I will be looking to capitalize on that by short selling ECYT. All right, next one on the list is MNGA. Ooh, hold on. I haven't looked at this one for a while. Okay, scratch that. Doesn't even really matter anymore. This is gapped up here. It had some news, but it's kind of just rolling over on itself. So you can keep it on watch. It might come back, but usually once they peak here pre-market, then roll over this far, they're usually pretty much dead, and then there's really not too much profit to make on them. So probably not going to pay attention to that today. All right, next one, NVAX. NVAX is up pretty big here this morning. Yesterday it was worth, you know, about $2. Now it's worth almost $3. So from overnight, this thing gapped up big time. So ideally, I would be looking to short this. I don't think it's going to run too much more than this. It's pretty close to $3. $3 can act up as a pretty strong resistance. It has previous resistance at 260. It's broken through that, and it's all the way up to about 290, if I'm correct, right? Okay, so no, it's back down to the 280s. Okay, so, but you can clearly see here pre-market, it's got a double top. So this might actually go red on the day. I'm not crazy about it. I'm really not. I don't follow NVAX too strongly, so I'm not crazy about it, but I definitely think it's worth keeping on your watch list just in case today for some potential moves, okay? And really that primarily covers the watch list here today. Is there any stocks that you guys are considering trading that you maybe would like me to take a look at? Any questions about trading, anything at all? You know, while we have a little bit of time here, would like to spend some time maybe answering some questions for you guys or anything that you might have here. Yes, MNGA is gapping up, but if you look at the gap up here, okay, we'll look at that, right? So, okay, yeah, all right, you say MNGA, right? So MNGA, right, gapping up pre-market. So it did, it gapped up all the way to here, and then it just dumped all the way down. Usually if they do this and they don't recover, they're not going to be very good to trade. So probably won't watch that or be really crazy about trading it, okay? AKER, we'll cover this one. AKER is most likely going to start dying out, okay? don't you might as well stop trading it. It's like I said, it's most likely going to die out. It might not. It might keep going, but it's very unlikely. I mean, it's a really junky stock, and it's overly traded. All right, so okay, AKER, big red day yesterday. It recovered a little bit, which is kind of expected. I mean, this was a really low price point, so I'm sure a bunch of newer traders were like, oh, it's 60 cents. I can buy it up now at a good price, which it essentially would be. But it's not a good stock to really trade, okay? And then secondly, it's had a really big run up, and here's the 200 moving average. On a yearly chart, whenever a stock runs up and it kind of stops out at this 200 moving average, that's usually a sign that it's found its peak, and you can see it's done it before, right? Kind of. It spiked over here, came back up to test this 200 moving average area, then it failed. I think it did it once before. See, and it kind of did it here, right, where it peaked up to it and dropped down, went over big here. But again, like I'm saying, this 200 moving average will probably act up as resistance and come down. Thirdly, what happens every time it spikes, right? Look at it spiked here and it crashed. Okay, spiked here, crashed, spiked here, crashed. Okay, so this thing has already spiked, so it's most likely going to crash. Okay, so I would highly recommend not trading AKER unless you can short the stock, which I don't even think you can. Let me scroll up, get back to some of these older questions. 1 second. TEUM continuation. Yeah, that kind of has a good chance for continuation. But I wouldn't recommend trading it. Look at how choppy it is. It's lower on the volume side. It's a very choppy trade. This isn't something that I recommend trading. Again, right? These penny stocks, right? A lot of these penny stocks, right, are really not good to trade. And you have to be able to pick which ones are, right? This is not like, this isn't fun to trade because there's no patterns, right? It doesn't really follow any good patterns, and it becomes very challenging to trade. Okay, so again, probably not the best to trade. And continuation, it looked like it was possible, but it's starting to gap down here this morning, so I wouldn't expect that it's going to really ramp up today. TVIX is moving pre-market. That's because the SPY is seeing some activity. BPMX is probably going to be very low on volume. No, this is a little bit heavier on volume. So it's had a nice run, BPMX up to 32 cents, dumps out, rolls over. You know what? Today it might actually, what I could foresee happening is like a little bit of a pop here this morning, but I still don't expect that this is going to go have a big green day, right? It's already been up for the past 5 days. So that's what you got to think. This thing's already up for 5 days. It's peaked out, right? It's starting to come down. This is most likely the backside, right? So you have your run up. Now we're most likely on the backside. So I would be more short bias on BPMX than long bias. To get your trend lines white, all you have to do is draw a trend line on your Thinkorswim platform. Once it's drawn, right-click your trend line. Then you'll go to Edit Properties, and you can change it to whatever size, thickness, or color you would like. MYO. I've looked at MYO for a couple days here. Let's look at this yearly chart. What's the price? The price is 488. 488. 488. 560. Okay. This isn't bad. It's still a little light on volume, for one. Right now, it's testing yesterday's highs of 490. This might not actually be bad for a long position over 490. So if it breaks over 490, you could take the long position and then put your stop just below 490. And then the only downside to this is $5 is going to be right above 490. So right over 490 is a big resistance already, but I would at this point maybe be long bias on it for a break over 490. LPCN. LPCN. Big spike, dump. No, probably not. LPCN is most likely going to stop here, right? It's got resistance here at $2. You can see from the other day, or that's where it peaked out. Not to mention, it's got, yeah, it definitely has resistance up here at $2. So I'd be very surprised to see a break through $2 right now. And as you can see, it's already having trouble doing it. So I wouldn't say LPCN is going to have continuation. Most likely going to have a red day. CROC. So that was weird. You know, CROC like doesn't want to show up on my charts very well, so I can't really tell you too much. It might. I really have no clue, to be honest with this, because it doesn't, you know, when I try and move into a different time frame, it doesn't really work at all. And yeah, I have no idea. This is a very choppy looking chart. I really couldn't tell you how this is actually going to trade at all. Let's see. BIOC, probably too light on volume to trade. Lower price stock, don't recommend trading it. Yep, low on volume, choppy to trade. Don't trade BIOC. OSTK did dump overnight. Let's see. OCN. What's OCN? OCN, too light on volume. It's a choppy trade. Won't trade. Don't recommend trading that. And again, guys, I look at this from a day trading view, right? That's what I'm saying, right? Some of these may be better for swing trading, but I can tell you right now, they're not good for day trading. Those are moving averages. Arrow, those are moving averages, and I have a video about that. Okay, so we primarily went over all of that good stuff. So again, that's all I have for you guys. So for those that may be tuned in a little bit later, I don't know why that's being weird. There it goes. So for those of you that tuned in later, you know, main watch is ECYT, ECYT short, TVIX or UVXY will be short biased in the morning, probably long biased towards the afternoon. I think we're going to see the overall market go green in the morning because it came down so much yesterday, and then we'll see it. We'll see it maybe go red. PTLA and BOX are another two tickers that we'll be watching today as well. So this is all for you that tuned in late. Now, again, guys, right? For those of you that, you know, any of those stocks you guys, you know, asked me to look at, I'm giving my personal opinion from experience and from a day trading view, not swing trading. And I can tell you right now, and it's nothing against anyone, right? Majority of the stocks that I do see come through to check out are most oftentimes not good day trading stocks because they don't trade on enough volume, okay? Not that they can't or that they have not traded on enough volume. It's just at this current time when I'm looking at them, they're not trading on any volume or good volume. And when that's the case, the charts look really choppy, and then you can't get a good enough idea on what direction it's going to go, and then it just becomes hard to trade, and you'll most likely lose money, right? And that comes a lot of times by trading these stocks that are below $1. Most of the stocks below $1 are worthless. You can still make money on them, but they're all junk, right? Not that you shouldn't trade them, but you have to be correct on when it is you are trading them. So I'll never recommend to trade any of those if they don't have a ton of volume. Don't trade AKER. AKER is most likely going to go red. It's already spiked. It's probably going to come down. I was right about it yesterday. I'll probably be right about it today. They're too predictable. They're super predictable, these lower price stocks, okay? And see, here's the thing. What happens is these lower price stocks, a lot of people can afford them, right? So someone like me, I never trade AKER. I don't need to trade it. I don't want to trade it. But a lot of people can afford a lot of these lower price stocks, okay? And this is nothing against anyone. I don't care about anybody's income or how much they make and how much they can trade with. I don't. What I'm telling you is the facts. More people can afford to trade these lower price stocks, okay? Chances are people who have not been trading stocks for a long time or who are just getting involved tend to fall victim to the lower price stocks. It's just psychologically, you're like, oh, I can buy way more of them, and if it goes up this much, I'll make this much, but I can't afford to buy as many shares of a $20 stock, so I'll need like 3 times the move to make the money, and that's the way that we'll initially think when trading. And what's going to happen is these lower price stocks attract volume of newer traders. Newer traders don't understand the fundamentals and the technical analysis behind trading stocks, as well as obviously a more experienced trader. So what's going to happen is a lot of times these lower price stocks will trade very choppy. They don't follow patterns. Their follow through is not as good. And that's because there's so many newer traders that get involved with these lower price stocks. They technically aren't trading them correctly. And then that causes a really challenging trading chart, okay? And that is just, it's a fact. It's what happens. It really does. Not that you can't make money on them. They tend to be a little bit more challenging, right? Let's see. Let's see. Well, INPX, let's see. Hold on, let me pull it up on this other chart here. INPX, it had a good spike yesterday, so like that wasn't too bad. Actually had some good volume. Downtrending for the past year. Wow, it was 138 before. Yeah, it just had a spike because it'd been coming down for so long. So that was really just a short squeeze. That's all that was a short squeeze. I would expect it to keep coming down today. I wouldn't be long biased on INPX today. So we're going to wrap it up there, guys. We're all done with that. Again, if basically everything you need to know about me trading and staying in link with me and Boiler Room Trading, all in the description below. If you want to check out my trading broker, the one that I use and recommend to newer traders, it's down there below too. So everything you need to do to stay linked up, all down in the description box. So check that out, and then I'll catch you guys all tomorrow morning. Again, this is the first day of the month, new trading month. Stay green. My goal is to go green every single day. It's going to be very challenging, but I always have that goal. So I'm going to try and go green every single day. I have a my goal this month is $20,000. That was my goal last month. I didn't hit it. I ended up only hitting 14,000 trading last month. So still a good month. Yeah, I want to hit 20,000 this month. So I have to average $909 a day trading to hit that goal with the amount of trading days we have this month. Okay. So everyone take care, and I'll see you tomorrow.